Welcome to the Alternatives Mason podcast. With host Brittany Mason, Chief of Staff at Banrion Capital Management, you'll learn how to build alternatives knowledge brick by brick. Banrion Capital Management uses technology to help independent advisors scale and educate themselves on alternative investments. And since education is such a big piece of what we do, we are excited to kick off the series to dive into the nits and grits of the alternative space.
Hello, everyone. I am Brittany Mason, and welcome to another episode of the Alternative Mason podcast. I am so excited today because we have another very special guest on the show, Andy Hagans. Andy Hagans is a seasoned entrepreneur with 2 decades of experience specializing in helping high net worth investors safeguard and expand their wealth through alternative investments. Having successfully founded, grown, and sold several multi-million-dollar businesses, Andy ventured into purchasing businesses via private equity partnerships and now collaborates with talented entrepreneurs and real estate developers through investments. As a co-founder of the Wealth Channel, the premier community of high net worth investors engaged in alternative investments, Andy plays an instrumental role, and he is also the host of the Alternative Investment Podcast, the top-rated podcast in the alts realm, catering to advisors, family offices, and high net worth investors. Andy holds a degree from the University of Notre Dame and resides in Michigan with his wife and 5 children. Oh my goodness, 5 children, Andy. That must keep you quite busy on top of
it does, especially working from home. It can get a little chaotic around here, but that's okay. That's okay.
I can only imagine. Oh my goodness. Would you say it's easier to manage the 5 children or these high network individuals that you work with?
Oh man, well, that's a really good question. I will say sometimes people ask me about having 5 kids, and there's kind of like this hump around kid number 3, I feel like. And then when you have 5, the older 2 can kind of help a little bit with the younger ones. So it's not quite, I mean, it can get a little crazy, don't get me wrong, but it's not quite as crazy as people think.
Yeah. How old are they? I'm just curious.
So the oldest is 10. Right now we have 10, 8, 6, 4, and 2, but we're about to have a birthday that then throws, the cycle begins actually on Thursday with the birthday.
Oh my goodness, such a busy time with the holidays now. I feel like once it hits Halloween, it's just basically the year is over. So birthday,
Totally.
holidays, and everything. Excuse me. Something I'm really curious about, since you have, 5 children and you work in finance, how are you introducing the conversation around money and finance to your children? I always find it so fascinating how our relationship to money is formed in our childhood. So what sort of examples are you setting for your children?
Whoa, that's a heavy question. What sort of example am I setting? I hope a good one, but not a perfect one, right? And I think to your point, kids, they watch what you do, not necessarily what you say, right? So they're probably absorbing what I do and what I say. But hopefully, I hope that I'm teaching them, values with money all under the umbrella of stewardship. I'm a Roman Catholic, and so I think my faith informs how I think about money. And so, ultimately, not to get too philosophical, but you did ask. I mean, my value is, it's just stuff, right? Ultimately, money is just stuff, and we are stewards of things that we own on earth, but ultimately I'm going to pass away, and not so. Money is not really the point. It's an instrument. It's a means to an end. And I hope that I'm imparting that lesson on my children. I guess that will remain to be seen.
No, that's wonderful. I love that. I think that's really important. Yeah. Money can open so many opportunities, and it's freedom, it's energy, it's not necessarily the material things. It allows you to build a sense of security and safety and allow you to help others if so I find that fascinating. And how about you when you were a child? What was your early relationship to money or introduction to money?
That's a great question. I grew up middle class. I had great parents. I think they taught me a lot about the value of hard work. and it's sort of I guess a value in my family, just from my siblings that we've picked up from our parents, just a healthy respect for work and meaningful work. Not that you necessarily, live to work, right? You work to live, you don't live to work. But, just this sort of idea that, even as teenagers, we were encouraged, almost expected to get jobs, part-time jobs. It's like, well, if you want a car, you're a teenager, you want a car, you're going to be paying for your insurance, or at least helping pay for it. So, I think that was, a great thing to absorb, just kind of the idea of, even as a teenager, beginning to take responsibility for our finances, for things that we want. And additionally, I would say, my mom was a teacher. My dad was a business owner until he retired. He owned a car dealership, and I actually worked part-time for him. And I think I absorbed so much, philosophically, temperamentally, also just practically, like in terms of street smarts, just sort of observing him run a business. And I think in that respect, I was really fortunate, because it never really occurred to me that I couldn't or wouldn't own my own business. Like, no one ever told me that I would someday, but I think I just observed my dad, and I was like, well, obviously I want to be my own boss and be a business owner someday.
So that was the birth of you becoming a serial entrepreneur.
I think it was, yeah. And, my current business partner, Jimmy Atkinson, he was also my first business partner when I was age 19 or 20, because we were college roommates. And his dad was a business owner too. So it's kind of interesting. Like, both of our dads were entrepreneurs and business owners. And then I'd never met Jimmy before, and we were roommates at the University of Notre Dame. Like, the university doesn't let you pick your roommates or anything. They just kind of stick you with people, which is interesting. So you meet new people, and I met Jimmy, and we kind of just became friends. And we were both into websites and internet stuff, and also finance. And so, really, now that I think about it, we just started building a business kind of around those things. And then we did that later on in our 20s, and we're literally still doing that today. So
Fascinating. So you guys connected early on. Yeah.
yeah. And it was so cool to have that experience in college, where there wasn't really any pressure, right? So, like, our first business was just like, just throw up a website and try this or try that, and like, maybe we can make enough money to pay for beer next weekend, or whatever. So I think a lot of people, they have trouble just getting started because they're so afraid of failure, I guess. And we just kind of did it like, this is no big deal, let's just go build something and see if it works.
What was your first business?
We were, it's almost hard to explain, and I don't even remember all the details, but the basic gist of it was, we discovered this thing called Google AdSense, which was their advertising platform for publishers. And there was like no bar or threshold to sign up. So you could have a website or a blog about, any given business topic. And even if it only got a couple thousand page views a month, they would still accept you as a publisher. And every time somebody would click on one of the ads, you'd get like a pay per click, like Google would take their 30% or whatever, and then they'd pay the publisher. And so we found out about that. And our idea was, let's go look for keywords, like in the advertising console, Google AdWords, that are really expensive per click. And then we'll like make a website about that topic and publish content about that topic. So we found out, like, I didn't even know what RFID was. Jimmy knew what it was. But we found out, like, people are really bidding on this term RFID. It's kind of this business to business industry at that time, it was. And so we started publishing news and information on RFID, and we got in the Google AdSense program, and made money that way. And like, I forget what the threshold was, but it was something like if you made $50 in a month, Google would send you a check. So we'd get a check for $50 or whatever. And it's like, cool. And then that never really got big, but it introduced to us the concept of publishing and getting content out there and attracting eyeballs. And I think that was a skill set that really has carried us all the way up until today.
Really? Wow. Yes, that was going to be my next question. What did you learn the most from that experience starting your own business? So those tools you've used even now.
Totally. Yeah. Audience development, traffic development. But I think the biggest kind of life lesson that we learned is there, you go into some industries and there are literally gates or gatekeepers, right? Like if you want to be an attorney, you're going to need to go to law school. You're going to need to get a law degree. Like that's kind of a gate that you have to pass through.
Yeah.
With business, with internet business, a lot of industries, there's no gate, right? There's no one that will tell you like you're not allowed to do this, you can't do this, right? So I think we really, both of us, internalized that lesson, and it kind of gives you this confidence. And it's almost like anytime you do something new, depending on what it is, you might have an imposter syndrome, right? So
Yes.
like my current podcast, the Alternative Investment Podcast, now we're like close to 170 something episodes.
Yeah.
But episode 1, I'm like, I don't really know that much about alternative investments, but I'm interested in them and I'm passionate about them. So I'm just going to start it and like, we'll just see what happens. But I think a lot of people get stuck there and they go, well, I'm not a real expert on this topic, so I shouldn't add my voice.
Exactly. I mean, honestly, I've struggled with that myself too. I mean, I only moved into finance a couple of years ago, and my background is more marketing and advertising, so something that's entirely different. And so it was definitely a challenge and a big personal fear, but I just dove right in. And I became a banker first and then moved over here to Banrion. But definitely imposter syndrome, I can relate. I think we all can, for sure, when you're starting something that's new and different. But the hardest part, yes, it is just jumping in, going for it. And so I'm just encouraging everyone that's listening to just go for it, just learn. And all the information is out there at our fingertips now, too. So I'm curious, how many businesses did you build and sell before then moving into, investing into private equity?
So yeah, Jimmy and I were just at the University of Notre Dame the other day giving a lecture at the Fitzgerald Institute for Real Estate, and a student actually asked that question because we said in our presentation that we'd built and sold 4 different businesses before founding Wealth Channel, which is our current business. And then I had to tell the student, I don't think we were entirely honest with you before. Not that we really meant to lie, but we didn't tell you about the 10 plus other businesses that we started that totally failed, flopped, fizzled, whatever word you want to use. So Jimmy and we've done at least, I want to say 15 businesses, or tried, many different things, but we had 4 businesses that we actually, exited for like a significant exit or capital gain.
Okay. Awesome.
One of those, probably the most that intersected really with like hard finance, was ETFdb.
Okay.
So we created that. It's right around 2010, 2012 was when it was at its peak. And at its peak, it was the largest independent media covering exchange traded funds in the United States.
Wow.
That business was a ton of fun just to build. At that time it was a smaller universe, but to take the universe of ETFs and kind of sort them into categories. And we had this screener tool that was very popular with investors and advisors, but we ended up selling it. And it got rolled up into this larger company now. And it still exists, by the way, ETFdb. But with all these different exits, Jimmy and I both, you have the liquidity event, you have capital, And you're always essentially told, max out your 401k, max out your IRA. Those are great things to do, like absolutely. But once you do that, it's like, well, now what? And you realize, well, all this money goes into a taxable account. If that's how you're investing it, taxes are a huge headwind. And so you realize a lot of family offices, a lot of accredited investors, they're investing differently. Not everyone, but the more sophisticated ones are. They're looking for alternative investments. They're looking for tax advantaged investments. And they're typically investing in some of them, again, not all of them, but the more sophisticated ones are investing in illiquid investments that can achieve higher returns, especially after tax, and have less volatility than, that market portfolio like last year. If you were heavily invested in the market, obviously there's a lot of volatility. So it was kind of, I got into alternative investments, not really on purpose. It was more just a result of having these liquidity events as an entrepreneur.
And seeing those opportunities. Yeah. So as the co-founder of the Wealth Channel, so that's what inspired you to start that community? You saw a need in the industry. What did you want to create with the Wealth Channel exactly?
Yeah, great question. Well, Jimmy actually started our business. So the seed of Wealth Channel actually started in Opportunity Zones. So I don't know if you're familiar with Opportunity Zones or not. I mean, I know a lot of people aren't. So the gist of Opportunity Zones for your audience is it's a tax incentive that allows people to invest in underprivileged, underdeveloped economic areas, census tracts in the United States. And in return for that private capital being invested, you get significant tax benefits. So you can defer capital gains by investing into Opportunity Zones. So that program was announced, I believe it was either 2017 or 2018. And Jimmy had the idea, like his light bulb went off as soon as it was announced. I'm going to start the first media property to cover Opportunity Zones because I think they're going to be huge. Kind of like a 1031s in the real estate industry. They're like this big, mature tax incentive that everybody uses. We believe Opportunity Zones can be that someday. So he started a podcast. He started this media property and an event series called OZ Pitch Day that was connecting accredited investors on the one hand with Opportunity Zone funds on the other hand at these live events, so that investors could kind of see the different projects and funds that were open that they could invest in. And so that media platform was called ETFdb, and it was growing. And Jimmy called me one day and told me about it. And he was like, this is going well, but I think I might need help scaling it. And so I was like, all right, let me invest. Let me come aboard and help you scale this thing. So I invested in ETFdb and have helped him to grow the Opportunity Zones media platform. And then again, almost by accident, a lot of these fund sponsors that we were talking with and working with, they had other funds that were non-Opportunity Zone funds that were just other types of alternative investment funds. And we realized, well, some of these other funds, whether it was farmland or other types of real estate or, DSTs, they're still interesting investments that we had a passion for that we wanted to cover. And so that's when we launched the Alternative Investment Podcast. And so essentially we're still covering Opportunity Zones. That's kind of where we have the really deep connections in the private equity world. Mm-hmm. But we wanted to broaden out, cover some of these other opportunities. And so we do events, content, education, all around all these types of alternative investments, and with a specific special emphasis on real estate and Opportunity Zones.
Fantastic. What are some of the common misconceptions that you address on that podcast?
Boy, that's I'd have to really think about that. Honestly, it's not even misconceptions with alternative investments. I found that most people simply don't even know what they are.
Right. They're
How to
so vast. I mean,
exactly. And Jimmy and I, we usually define them by what they're not, right? We usually,
yeah.
someone says, what's an alternative investment? And it's like, well, anything that's not a stock or a bond or cash is an alternative investment. So almost everything is, you know, if you think about it that way.
Yeah. So can you discuss the role of alternative investments in wealth protection and growth, and why, you know, in a deeper, the secret sauce for high net worth investors?
Yeah,
You
that's a great question. And I think the interesting thing to me when I started covering the space, I thought the growth, you know, the alpha, the higher, the enhanced returns was going to be the primary attraction for most investors for alternative investments. But over time, I realized I think the primary attraction to them is really the portfolio diversification. You know, if you look at research, depends on who you ask, you know, it depends on which source you're referring to, but it's increasingly universally acknowledged that adding alternative investments in an intelligent way to a diversified portfolio lowers risk, lowers volatility, right? So, and I think that is the core appeal, even for advisors who are, you know, they're adding alternatives to client portfolios. I think it's really because of that, because they lower the volatility. And then I think the other reason is, you know, clients are asking for it. So they're responding. So that's the protection part, is they can lower volatility. And again, you always have that question of what is the time horizon of the investor? Can they even afford to invest in illiquid investments? So I don't think that there's a one size fits all answer for
Mhm.
everyone. Like I wouldn't say that every single person in the world needs alternatives in their portfolios. It really depends. Risk tolerance, investment, you know, time horizon, and those other constraints. But as far as the growth, I think where alternatives are really powerful is for private investors. You
Mhm.
know, one of the things I talk about when I really learned about alternatives and got super passionate about them, I read a book called The Ivy Portfolio by Meb Faber, who I had on my show. He's an incredible guy, really smart guy. But in the book, he talks about how the Ivy endowments, the Yale Endowment, Harvard Endowment Fund, they've been investing in these illiquid alternative investments for years, achieving alpha by investing in things that retail investors really couldn't access. And one of the reasons that they were able to do that is because they didn't really need liquidity, right? If you're an endowment fund, your liquidity need is very predictable year in and year out. It's going to be like 5 or 6% of your principal. But the thing is, with institutional investors, they're not usually getting any tax benefit, right? If you're a nonprofit investor, if you're an endowment fund and a nonprofit, a lot of the tax benefits of alternatives don't even accrue to you, because you're not necessarily paying the same taxes that we private investors are anyway. So I think then if you look at a private investor, if you look at something like an opportunity zone incentive, or think about 1031 exchanges or private energy investments with depletion, those tax incentives are so powerful for private investors, because when you run the returns through that lens of triple net returns, returns net of fees, net of inflation, and net of taxes, then you go, oh wow, this may have been a similar gross return pre-tax compared to the stock market or compared to the bond market. But then when I add in that tax advantage, it might be an extra 200 basis points or 300 basis points of annual return. And then that tax savings is going to compound, right? So
Yeah.
yeah, that to me is really the, if I could sell alts, if I could be like an unofficial alts spokesperson, that would be, that's the pitch. So if it appeals
That's
to
it.
you, great. If
That's
not,
the sauce.
yep.
So what is your strategy then for your selection process when you evaluate potential investment opportunities in private equity?
Yeah, that's a good question. And I think it depends on the type of investment. So I really make two types of investments in private equity. One type of investment that I've made is just as a pure limited partner as an LP. And, then I'm usually, it's more of like a typical investment where, you evaluate the offering, you do due diligence, you look at the prospective returns, you look at the underwriting, obviously look at the deck, talk to the GPs. And when I'm evaluating investment offerings as a limited partner, the biggest thing I look for is track record, right? Because, things always go wrong, right? There's no, when someone has a real estate project and they plan to build this big multifamily development and there's a 7-year hold or 10-year hold or what, like nothing is going to go exactly as planned. That's the one thing you can know for sure. Is that like whatever in the deck, it's not going to work out exactly the way that it's in the deck. But if you're investing with a general partner, a GP, a fund manager who has experience in this asset class, whether it's energy, real estate, whatever it is, credit, and they've been through multiple market cycles, they've seen the peak, but they've seen the trough multiple times. And I'm convinced that they're an honest, square operator. To me, that's the biggest thing. That's what makes me feel safe and confident as a limited partner, is evaluating not just the offering, but the sponsor. Then on the other kind of side of things is when I'll invest as a, co-GP or as a strategic investor. That's more, I guess I would call it micro private equity. That's where I'm looking for very small companies, especially on the private equity scale. This would be micro PE, small companies where I can add strategic value with my, my knowledge of either marketing or the industry landscape or whatever. And those investments for me tend to be the most fun, where I can get to know the team and maybe be on an advisory board. And they also typically have the most variance in the sense that those types of investments, at least in my experience, they tend to either go belly up or generate, amazing returns, kind of that more venture capital power law type return profile.
Well, what kind of advice do you have for people that maybe want to follow in your footsteps, young entrepreneurs that are looking to invest, or investors looking to, partner in private equity?
Yeah, that's a good question. Well, I would say, getting started as an investor, I wouldn't suggest that anyone necessarily just skip ahead past traditional investments. Mm-hmm. Right. So it's just to be clear, I own stocks, I own bonds. And I think it's really important to just build those habits of, am I maxing out my IRA? Am I maxing out my 401k? Am I sort of doing the core basics? Mm-hmm. But presuming that you already, are sort of doing the basics and you're maximizing all of that tax advantaged investment space that's available to you, then I think really it's deciding, do I want to be more of an entrepreneurial GP type investor? And that's really, you're really at that point an entrepreneur who's also investing in businesses along with your sweat equity. Or do I want to be a limited partner and invest passively? Like maybe you're a doctor or lawyer, or maybe you have a business, and you want to invest in other businesses, but you don't really want to get involved in those other businesses, which I think is totally fine. I think being an LP is one of the best things in the world, right? Because you get to invest in an offering, you get to kind of be part of the club, I guess, so to speak, of the people who are funding that deal. And then you don't have to deal with any of the headaches, right?
Sorry, my dog. The joys of working from home.
Yep. No worries.
Oops, sorry about that. Yeah.
All good.
All right. But yeah, so could you share some success stories or, some examples of how alternative investments have helped your high net worth investors preserve and grow their wealth?
Yeah, I mean, definitely some success stories just from the opportunity zones world. Why don't I start there?
Yeah.
We have at HNWIs, we have partnered with multiple GPs who are raising opportunity zone funds that are doing ground up development all over the United States. So one of these partners is Urban Catalyst, and they're developing office, residential or multifamily mixed use space in San Jose. And so they're building these beautiful, big, like it has to be said, there's big, beautiful projects in downtown San Jose. And I have seen so many investors connect with our HNWIs, our media operation and our events, who went from not even knowing that the opportunity zones tax incentive exists to realizing, well, I have a capital gain, I can defer it, and then actually placing that investment with either Urban Catalyst, or we have several other, different funds that we work with who sponsor our events. And to me, when you're able to defer a capital gain, you're locking in, like I call it alpha. I mean, I know it's not technically alpha if you read a finance textbook, but when you defer a capital gain in that way, in a way that you otherwise weren't going to do, you're locking in, a ton of what I call alpha, instant return, guaranteed return. Like you've just lowered your tax bill in 2023 by deferring this capital gain and reducing it. And now you're also a limited partner in this, amazing real estate project that I think could deliver very high returns. Same thing is true outside qualified opportunity funds with 1031 exchanges. We see investors who want to exit a property they own, do a 1031 exchange into a DST, and now they're invested in institutional grade real estate, having exited their previous property and paid no capital gains tax on it whatsoever. So I guess what kind of fires me up, gets me excited, is seeing people get these tax wins, because it's a free lunch. Our other business partner, Michael Johnson, he calls it the free lunch. It's a guaranteed return. If you can optimize your portfolio, reduce your tax bills, now I have more capital, more in my principal that can now compound indefinitely, right?
Mm-hmm. Mm-hmm. What are some other favorite wealth strategies that you have that advisors tend not to utilize?
Well, that's a good question. I mean, I would say the co-GP stuff, the more entrepreneurial, angel investing, micro private equity, it's the Wild West. And I'm going to say that I love it. And again, I think my best personal investments have been in that micro private equity space. But I also want to sort of say, buyer beware. Like if you don't know an industry and a team really well, I'd almost advise people not to do micro private equity. So I understand, one thing I respect about RIAs and advisors who don't chase every fad is it's okay to not invest in everything. Like even across the alternatives landscape, there's so many different types, asset classes within alternative investments. It's going to be really hard to be an expert in every area, to evaluate asset managers, fund managers in every sector and every subsector. And I think it's okay for advisors to say, these are the major asset classes, and maybe these are some alternative asset classes that I know well, that I'm comfortable with, doing fund selection, doing investment selection. There's some of these other asset classes that I'm not an expert in, that I don't feel comfortable evaluating. And it's okay to just pass on them. Like I really do respect that. I think that's a lot better than the converse, which is, pretending to know everything and pretending to be an expert in every, which just isn't possible in alternatives, right?
Right. And it's always changing. It's the industry is constantly evolving and changing as well. So we have to stay up to date on that. So some of your favorite strategies, you were saying earlier, real estate. What are some of your other favorites as well for types of alternatives?
Well, I'm bullish on energy right now.
Okay.
So I think it's a little bit of I don't know, is it contrarian? I don't, you'd have to tell me. Is it contrarian to invest in oil in 2023? I feel like it is a little bit contrarian. I know the price of oil is higher, but it's alternative energy and renewable energy is obviously, most people think of that as the future,
Mhm.
but the world still needs oil, right?
Yes.
We need a lot of it. Like, turns out we need a lot of it. And so I think there's a big opportunity for private investment in oil. It's a little bit like micro private equity or some of these other asset classes where, if you don't know what you're doing, if you don't know how to diligence an offering, it can be tough. It can be very risky to be a private investor. But I also think there's a lot of opportunity there. Um, Certainly real estate. I mean, real estate, I almost hate to just say real estate because there's so many opportunities within real estate. But to qualify real estate a little bit more, I'm really interested in the tax advantaged real estate offerings, right? So as an investor, or even just if someone like asks me, how do you invest your own money? I'm not an advisor, so I'm not giving investment advice. But if someone asks me, where should I look? That's the first thing I point people to, is to the tax advantaged forms of investing. So in energy, private energy investing in oil and gas, that is generally very tax advantaged. And I think in real estate, there's really no reason to invest in real estate if it's not in a very tax advantaged way, right? Because there are all these opportunities to invest in real estate with tax advantages. So it's like, why would I invest with just kind of a plain Jane non-tax advantaged offering? So one interesting strategy that I think a lot of people can look at is, if you own real estate, if you can generate a capital gain through the real estate, you can do a 1031 exchange, potentially into a DST. With opportunity zone funds, though, if you can engineer any kind of capital gain, even if it's not from real estate, if it's from stocks, bonds, mutual funds, whatever, any kind of capital gain is eligible to be invested into an opportunity zone fund. And Jimmy and I, we have invested in, obviously, real estate funds that are structured as qualified opportunity funds. We are also limited partners in a venture capital fund that happens to be an opportunity zone fund, because it just so happened that the campus for this venture capital, like their headquarters, just happened to be located in an opportunity zone fund. So I'm all about being creative, like in a very above board and legal way, but being creative in finding ways to, find tax advantage investments in every asset class.
Yes, yes. It's all about being innovative and finding new ways to make things work. So what other trends are you seeing emerging for alternative investments?
Well, I'm guessing that the same trends that, Banrion and your team, that you're kind of at the forefront, or that you're, pushing, which is just increased advisor adoption,
Mhm.
obviously, from client demand. I think ultimately, because clients are demanding alternatives, I think advisors are saying, well, we're going to offer them, right? I don't want my client to leave and they're asking for this, so I have to offer it. So I think that is a huge trend. And, for sure, the democratization trend, you have 506c offerings where, fund sponsors can directly solicit their offerings to investors. So I think that's interesting, that there's now, not everything is going through a broker dealer, right? There's different types of sales channels and sales cycles for different fund sponsors. The biggest trend is just the macro trend of, this industry has grown to such a huge size. I mean, it's amazing, but the really amazing thing is, with the industry essentially having, like, what, tripled in size in the past decade or so, it is still growing, depending on the asset class within alternatives. It's still growing at 5, 6, 7, 8% a year, or more. And generally, industries that are that big don't continue growing at that pace, as they mature to be as large as the alternative investment landscape is. And so I think growth is just, it's the biggest headline. And I
Yeah.
personally, I don't see anything slowing it down. Do you?
I don't. And typically I like to ask my guests too, do you feel the 60-40 is dead since we are seeing such this massive growth for alternatives now? Do
Yeah.
you?
Yeah. I mean, I haven't heard anyone disagree with that in years now. I think so. I'm definitely, not going to be the person.
Evolving. It's certainly evolving for
Well,
sure. I mean,
yeah. And your statement is the 60-40 dead. And I think everyone's saying, yeah, it is dead. And that the fact that that's now mainstream is that,
yeah,
that most advisors would agree with that statement.
yeah.
To me, that's amazing. That's a sea change from 20 years ago.
Yes, for sure. So how do you like to stay informed, to continually educate others on alternative investments? What are some of your favorite outlets and resources?
Well, I'm going to cheat on this one, and I'm going to self-promote my podcast, the Alternative Investment Podcast. But I will
Yes.
say, I will say, I think it's true though, in the sense that, so I have this show, the Alternative Investment Podcast, and I interview industry stakeholders. Like I'll have, executives from Kaya or iCapital, organizations like that, as well as asset managers, fund managers, all kinds of different industry participants on the show, and I'll interview them in like a long form interview. And for me, it's been the best way to learn, because really two reasons. One is I'm getting connected with all these high level people from around the industry, and I can essentially ask them anything within reason. But then the second thing that is great about being the podcast host of this show, I'm not an advisor or like a asset management executive, and no one expects me to know everything.
Mm-hmm.
And so I've just decided I'm going to ask all the dumb questions. And sometimes it might be a question that like a listener doesn't know the answer to. Sometimes it might be a question that actually I don't know the answer to. But either that doesn't matter, but there's just no pressure on me. I'm like, I'm going to ask what I think a lot of people in the audience might be wondering, but afraid to ask. And I think sometimes advisors or professionals in the industry, it can kind of be hard to just ask those kind of dumb questions, because you feel like you have this pressure on you to kind of know everything. And I don't feel that pressure, because I'm like, hey, I host the show. Doesn't mean I'm an expert on all this. It's really my guests who are the experts.
Absolutely. I can relate to you with that 100%. As I have been honest, I'm learning as well. It's a new space for me. So, but I find it so fascinating and very passionate about it, just like you. So, learning so much. So, what advice do you have for me then?
Boy, I think, well, first of all, you're working for a great organization. I love Shayna. I love Banrion. I mean,
You have
I
an
think,
amazing team. I love my team.
yeah, so I think you're already doing it right. And I love that y'all have your own podcast now. I mean, the thing is, with the education gap, it's this recurring theme in the alternative investment landscape. There's an
Mm.
education gap, not only with investors, but even advisors. And not to sound cheesy, but I think it's going to take a village, right? There's not one silver bullet, whether it's Kaya or different educational organizations, or my show or your show, or other content on YouTube and books. Like, it's going to take like an all of the above approach, I think,
All of
to
it. I took the Kaya, the fundamentals and alternative investments. It was a really great course, very in depth, really good course.
Nice.
So
Nice.
definitely recommend that too.
Okay. How
Yeah.
how long does that program take, the fundamentals course? Is
You
it
can do it at your own pace, so it really
okay?
just depends. So it just
Great.
depends to go through it. But I definitely recommend that for people who are interested. It's really good. What are some of your favorite books that you've read?
Well, I mean, Ivy Portfolio for me was like the seed, I guess, the seed that got planted that really got me into alternatives. So I have to mention the Ivy Portfolio by Meb Faber. I love the old Ben Graham books. I never get tired of Ben Graham. I mean, I think a lot of investing success comes down to wisdom rather than intelligence. Like you see highly intelligent people make unwise decisions and not maybe fail or not have success, and by the same token you might see less sophisticated people but who are wise with their approach succeed. So I'm going to recommend Ben Graham. To me, the classics never go out of style. The Intelligent Investor, I forget the title of his other book, but is it Securities and Intelligent Investor? I'll stick with that one.
Yes, love it. All right, writing that down for my read. Well, thank you so much, Andy. I think we are out of time. It's been wonderful to sit down and chat with you and learn a little bit more about your background. I love your philosophy on, money and how your relationship to money and how you're teaching, your children as well. And so it's been very, very interesting to learn about your journey and everything that you're doing. And I agree, it will take a village for us to really educate people on alternative investments. So thank you for taking the time to chat with me about them. And thank you everyone listening. We're really excited to, sit here and chat with Andy, and we look forward to our next episode. Thank you everyone who's listening, and we'll see you next time right here live on the Green Couch.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember, investing involves risk and possible loss of capital. Please seek advice from a licensed professional.